Hey everybody, Smart Silver Stacker here. Hope you're doing well. So a huge day in the gold market today. The gold price now well over $3,000. It's breaking through record all-time highs. Seems like every day now. And it's against that backdrop that I really want to take a moment and examine what's going on with silver. And in today's video, we're going to take a look at the silver chart, and I'm going to explain to you why I believe the silver price is on the verge of a major breakout, which is going to be absolutely stunning. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. If you are stacking silver, one thing you want to avoid is costly mistakes. And how can you do that? Well, you could sign up for my free e-newsletter with the link down in the description, and you will receive in your welcome email a copy of this free report, the Smart Stacker's Guide to Avoiding Costly Silver Bullion Mistakes, a practical guide for stackers to avoid getting ripped off. This report will probably take you about 5 to 10 minutes to read, and it could save you a lot of money if you are stacking. So check it out. Okay, so we're going to get right to the charts on this one. We're going to keep it short and sweet, but it is a beautiful chart here, the gold chart. You can see gold currently trading at $3,051, a new record all-time high. And I'm recording this Wednesday night, so this candle here is like the Thursday overnight session, but this is the candle for Wednesday, and you can see gold closed at $3,048. That is a new record all-time high in the gold spot price, and this was following today's FOMC meeting, so clearly the gold market and gold investors liked what Jerome Powell had to say at the FOMC press conference. I mean, as far as what the Fed did, they kept rates the same. That was no surprise. That was pretty much already priced into the market. There was like a 99% chance that that was what they were going to do, and no surprise, that's what happened. However, when Powell hit his talking points, the price of gold was in the green, closing at a record all-time high. Now, silver was in the red, and silver was sort of the outlier here. Now, we'll talk about why in just a moment, but also I want to draw your attention to what the spot price of copper did today, because copper on the Wednesday session was up 2.35%. That's a big move, and you can see it's a big candle here, especially considering that that was following a series of big updates. So the copper price now, if we zoom out, you can see that it actually just had its highest closing price on record. Now, if we zoom in here to May, this is when previously, May of 2024, that is, copper put in a record all-time high. Now, the intraday high, the highest on record for copper still, was $5.17. And right now, copper is trading at $5.13. So we're about 4 cents away from the record intraday high. So considering the fact that gold hit a new record high, copper hit a new record all-time high closing price and is just cents away from the intraday high of all time, silver really is the outlier here. But we got to examine this chart here, because I think that a lot of the reason that silver was in the red on Wednesday here, and it's not like it was closing, massively down. It closed well off the lows of the day. So silver traded as low as $33.46 on Wednesday, and then it closed at $33.78. So not too bad. But really what I think is in effect here is that this $34 level is serving as a major psychological point of resistance. And we've zoomed out here so that you can see the highs that were put in previously in October, which was the highest price that silver had hit in over a decade. I think you have to go back to 2012 to find a time when silver was trading above where it was here in October, when it just came just shy of $35. And I think really what we can see here is that this zone from 34 to, let's say, the high 34s, around 34.85, where silver got up to, the high was 34.86, the intraday high that it put in on the 22nd of October of 2024. This is going to be a zone of significant resistance in the silver price. But I want to talk to you about why I believe silver is setting up to just blow through this resistance. And once it does, it could very well be onto new highs in the silver price, surpassing the $50 level that we saw back in 2011 and also way back in 1980. So to do that, I want to recap on something we've talked about in the past, and that's just the nature of this bull market that began early in 2024. So early in 2024, price of silver was down here around $22. And we got to move higher between February of 2024 and May of 2024, where silver moved from that $22 level all the way up to over $32 in a matter of just a few months. And that move higher took the form of a classic Elliott wave impulse move higher. And what that looks like is you get this first wave higher, then you get this corrective wave, then you get a third wave higher, right? Or rather the second wave higher, but that's wave 3 because you got 1, the first one is the way up, then 2 is that corrective wave, then 3 is the second wave higher, then you get another correction, that's wave 4, and then you get the 5th wave, which takes you up to a new high around $32 in the case of silver here. Then that was followed by what is called an ABC correction. I know we've talked about this before, but this is relevant to where silver is headed next, so bear with me. And what that looks like is kind of the inverse of the Elliott wave impulse wave higher. You get the A wave down, then a kind of a corrective rally, that's wave B, and then C, which takes you to a low, but you'll notice that the C wave doesn't take you lower than the beginning of the original impulse wave higher. So we finished this ABC correction around 26 bucks. The silver spot price started around 22. So it's still a net gain for the silver price in this case. Then we got another textbook 5 impulse waves higher and lower. So wave 1, wave 2, wave 3, wave 4, and then finally wave 5. And that's what propelled us to that high of almost 35 bucks back in October. But then we got another ABC correction, right? So we got A, B, and C. And that finished up around $28.80. So just under $29 is where that ABC correction took us to. And then we began what we are currently in the midst of, which was the next Elliott wave impulse move higher. And, you know, there's a couple of ways you can interpret this chart, but I'm going to show you my take on it, right? So I believe that we got wave 1, which took us from just under 29 bucks to around 33 here in February. Then we got a pullback. That's the wave 2, that first corrective wave. And that means that right now we're on wave 3. Now, one thing about the third wave, according to Elliott wave theory, is that typically wave 3 is the strongest and it's going to show you the biggest gains on the biggest volume. And right now, yes, silver is a bit choppy. It's bumping up against that $34 level. This third wave should take us above or at least to where that previous wave finished up. So, you know, what that would look like is kind of like this. When you see the copper price breaking out to record all-time highs, you see the gold price breaking out to record all-time highs, and you examine how this silver bull market has played out thus far, it seems to suggest to me that we have simply butted up against some psychological resistance at the $34 level. And once silver manages to break through that, and I mean, I don't know what the trigger for that's going to be, right? It could be geopolitical in nature. Certainly, there's a lot of instability. There's some potential we could go to war in the Middle East. That could be it. It could be as something as small as some data being released by the Bureau of Labor Statistics. If we get another significantly cooler inflation print, and they, you know, have a variety of these inflation prints that print out every now and then, you get the CPI, the PCE, the PPI. If we get another cool inflation print, I think that that could be enough to propel silver higher. Or, you know, part of the reason that we haven't seen silver breaking out the way we have copper and gold yet, I believe, is because of shorting, naked shorting on the paper markets, basically just blatant manipulation. If we see a breakout above 34 bucks, that could fuel a short squeeze in silver. And certainly, you know, the fundamentals support this, right? You've got a structural deficit in the silver market every year to the tune of more than 100 million ounces. That's been going on for years now. We know that there's a lot less underlying physical metal than there are these paper derivative contracts which control the paper price. And there's a lot of short positions out there right now. And the thing about those short positions is those are investors, banks, institutions that have borrowed something they don't own. They've sold it into the market. Now, if the price continues to rise, and again, gold's breaking out, copper's breaking out, one would expect silver to continue to rise here. They may be forced to go into the market and buy that up pretty much at whatever the price happens to be. And that could fuel a short squeeze in silver. I think it's something that we're setting up. I think the chart supports this idea here. And I believe that we are in very short order going to see the silver price blow through this resistance. And when it does, we're probably going to be looking at $38 to $40 silver in a very short matter of time. It's going to move rapidly to the upside. And I think that this is going to catch a lot of investors by surprise. I mean, we know retail investors are not paying much attention to this. It's evidenced by the low premiums in the physical market. And also, one other thing I want to look at today is the gold to silver ratio. So here on SD Bullion, you can see that the gold to silver ratio today rose once again above 90. Now, what does that tell us? Well, if we look at this chart that goes back to 1995, you can see that right now we're here over 90, and there's very few times on this chart when this ratio is higher than this. In fact, the only real time that it got much higher than this is back in 2020 during that crazy sell-off when the spot price of silver dropped down to like 12 bucks. But that was an outlier, I believe. And then this chart here over at macro tens, it's not as pretty, but it goes back a bit further. And if we go back to the beginning of the current fiat monetary era in 1971, when Richard Nixon took us off of the gold standard, you can see that at that time the gold to silver ratio was kind of low in the 20s. But there's two instances where this spikes down to a very low level. So back in 1980, when gold was trading around 850 bucks and silver got up as high as 50, you can see it dropped down under 20 here. And the other time it spikes down is in 2011 during the other major precious metals bull market, when gold was up, close to 2,000 bucks and silver once again hit 50 bucks. The gold to silver ratio dropped down to the low 30s at that time. But the fact that it's up at 90 right now, I mean, the thing that we can really take away from that is that this bull market in the precious metals is nowhere near over. And you've got to keep an eye on this, because this spike down in the gold to silver ratio is a tell that a precious metals bull market is reaching a peak. But the fact that we're up near historically high levels suggests that this bull market is going to have a lot of gas in the tank to still move significantly higher. And in order for that ratio to compress, the silver price is going to move much, much higher. It's going to need to do a lot of catching up to gold. And fundamentals and technicals seem to suggest that that is what we're going to witness. But leave me a comment down below to let me know what you think. This is just my take on how silver is going to play out here. But my forecast is for in the near future, like in the next month, I think we're going to see some major action to the upside in the silver price. Anyway, let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.